Welcome to our Hurst Cycles webinar for the 30th of January 2017. My name is David Hickson, and as always, I must ask you to please make sure that you have read and understood these disclaimers. And with a bit of luck, that computer is going to show it to me. There they are. Fantastic. And so please make sure you've read these disclaimers. They are important, and they are also legally obliged, so it keeps my lawyers happy. Anyway, in today's webinar, we are going to be extending, in some ways, our previous webinar. Our previous webinar on the 16th of January 2017 was about trading the interaction between price and the FLD, something that I call the FLD trading strategy. And the webinar was very popular, and we received a lot of questions by email and various other channels asking for clarification about some of the things that I spoke about in the previous webinar. And so I decided that today, instead of moving into some other topic altogether, I thought that, in fact, what I would do is make today's webinar a bit of a Q&A session. So I've put together a set of questions that we received by email. If you have any questions and you've joined us live, then please put those questions into the chat window, and I will do my best to answer those questions as well in the course of today's webinar. First of all, if you missed last week's webinar, then that is the link to last week's webinar. I'm going to try to speak in today's webinar in such a way that if you didn't listen to last week's webinar, you're not going to be entirely out of touch with what I'm speaking about. But it would be a great idea for you to go and catch up on last week's webinar as well, because that's really where all the basic information is about these FLDs and the way that we trade them. I'm going to put that link into the chat window if I can. There we go. Yes, so that link's in the chat window. So if you're joining me live, you can link to that video, and you could watch both videos at the same time if you feel like it. So that is the link for last week's webinar. You need to leave out the spaces, of course. The reason I put the spaces in there is because this very fancy Prezi system replaces the link with the actual video, which wasn't really very useful in this particular circumstance. So let's get to the questions that came out of last week's video. In last week's video, I spoke about trading the interaction between price and the FLD. In case you missed last week's video, what is the FLD? Well, it is a line on your chart. It is one of the tools that Hurst defined in the 1970s, or in fact in the late 1960s, I believe he actually defined the FLD. It's an acronym that stands for Future Line of Demarcation. And it's in fact a very simple line, which brings me to the first question that many people asked, and many people have asked over the years. They've asked me, how can I plot the FLD on my charts? This is obviously people who aren't working with Sentient Trader software or with the MetaTrader 4 indicators, the Hurst Cycles indicators, because of course those software packages plot the FLDs for you. You don't have to think about it. But what if you don't have the software? Can you plot the FLD on your charts? Well, there is good news, and there's also a little bit of bad news, but it's mostly good news. The answer is yes, you certainly can plot the FLD on any chart. If you have any kind of trading software, then you can certainly plot the FLD on that chart, because the FLD is a very simple line. It is simply the median price displaced to the right. So the median price, of course, is the mid price between the high and the low. So no matter which charting software or trading platform you're working with, you are likely to find that you can very simply plot the median price. You use that formula over there. You take the high plus the low and you divide it by 2. And that is the median price for a particular bar. Then all you need to do is you need to displace that median price to the right. In other words, you displace it into the future. That's what an FLD is, and that's how Hurst defined it. But here is the gotcha, or the slightly bad news, because you need to know how many bars to the right you should displace it. It's all very well to plot a median price and to, just displace it 10 bars into the future. If you displace it an arbitrary or random number of bars into the future, then it's going to be an interesting line, but it is not necessarily the FLD. It's not the future line of demarcation. So how many bars to the right do you need to plot the line? Well, the first thing you need to know is that, of course, there is an FLD for each and every cycle. So an FLD is always based on a particular cycle. And so the formula for working out how many bars to the right you need to displace your median price is this formula over here. You take the current wavelength of that cycle and you divide it by 2. And then Hurst's original formula was that you should add 1. So that's an interesting subtlety. I won't spend too much time sort of dwelling on it now, but Hurst used to divide his wavelength by 2 and then add 1, which has the effect of displacing the FLD ever so slightly to the right. Now, some people leave out that +1. It's not very important, but that is the formula. So there is the slight problem, because if you have not performed a cyclic analysis of the data that you're looking at, then you don't know what the current wavelength is for that particular cycle. And that is why whenever people ask me, can I plot the FLD on my trading platform or my trading software, how can I plot the FLD? The big question is, of course, what do you use for the current wavelength? So I'm going to suggest a way around that. Obviously, one way around it is to buy Sentient Trader software or to buy the MetaTrader 4 trading indicators, but the Hurst cycle indicators. But you really do not need to buy that software just to plot your FLDs. Sentient Trader is a very comprehensive package that provides you with a lot of stuff. You certainly don't want to be buying the software just to plot an FLD. Okay, so there is a little trick that I'm going to mention in a moment. The other problem is that cycles move in real time. According to Hurst's original definition of the cycles, which influence the price movements of financial markets, they move in real time. In other words, they keep moving over the weekend. So let's just take an example. We're looking at a 20-day cycle, and we want to plot the 20-day cycle FLD. What's the current wavelength? Let's say that you have performed a cycle analysis and you know that the current wavelength is 17 bars. 17 days, I beg your pardon, 17 days. So therefore, how much should the 20-day FLB be displaced to the right? Well, you take the current wavelength, which is 17, you divide it by 2, that gives you 8.5, you add 1, that gives you 9.5 bars, you round that off however you like to round it off to either 9 or 10, and so therefore the median price, in order to be a 20-day FLD, needs to be displaced by 9 days into the future. Okay, so if you're working on a trading platform, most trading platforms and most trading software ignore the weekends. So you would, in your formula to plot your FLD, you would say displace the median price to the right by 9 bars. Most trading platforms would then shift the median price forward by 9 bars, and 9 bars later would in fact be more than 9 days later, because the trading platform does not plot the weekend. I hope that that's clear to you. For instance, let's say you've taken the median price from Monday the 16th of January. The correct position for that median price on your chart is 9 days into the future, which is on the 25th of January, which would have been a Wednesday, I think I'm correct in saying. However, if you displace your median price on most trading software packages or trading platforms, if you would displace it 9 bars, then they would not include the weekends, so they would in fact plot that median price on the next Friday, which is 9 trading bars later. And that's incorrect according to how Hurst originally defined his cycles. Now, there's a lot of discussion about that, and we could be distracted into an entire discussion which would fill the hour up. And many Hurst analysts have different opinions about this. But in terms of how Hurst originally defined it, cycles take place in real time whether we are trading or not, which means that weekends are included. So to answer a question from Don Cross, he says, do nominal cycles include weekends? Yes, Don, they do. The cycle length is what's called a calendar length as opposed to a trading day length. Okay, so yes, indeed, the nominal model that Hurst worked with does include weekends. And as William has helpfully pointed out, you multiply by 5 and divide by 7 and you get the correct displacement. And so, of course, that is the solution to doing that, is that you multiply by 5 and you divide by 7. So in the case of our little example, where we wanted to displace it by 9 days, we would instead displace it by 45 divided by 7, which is about 6.5. So you would in fact be displacing your price by 6.5 days. The problem is that you are slightly fudging the boundaries there with that. It's not too much of a problem, but you need to be aware of it, and you need to be a little bit careful about it, because that FLD is not necessarily in exactly the right place. On some occasions, it's going to be sort of 2 bars early, and on other occasions, it might be 2 bars late. You know, it's going to be sort of moving around a little bit. Marco says, in short, bars to be considered must be calendar bars. Yes, Marco, in short. I'm not very good at expressing things shortly, but yes, in short, the bars to be considered must be calendar bars if you want to stick to Hurst's original definition of his cycles, which of course he made 40 years ago, and we could, as I've mentioned, have a big conversation about this, because there are some Hurst analysts who claim that because of 24-hour markets and all that kind of thing, it doesn't really matter anymore. I'm a little bit of a purist, so I would I stick to the fact that you do include weekends in your bar counts. Okay. Thomas says, do you round up or round down? 6.5 it should be 6 or 7 bars. Thomas, the answer to that is probably that you should round up. And the reason for that is because if you round up, then you are putting your FLD a little bit further, 1 bar further into the future. And for the same reason that Hurst added this 1 over here. The reason for putting the bar just slightly into the future is because you, if your FLD is too early, then you are in danger of making the mistake of getting into a trade prematurely. If your FLD is a little bit later, then you are less likely to get into a trade early, but you are prepared. I hope that makes sense. So generally, you should round up instead of rounding down. That's my personal opinion. Okay, so let's say that you are wanting to plot your own FLDs on your trading platforms, and you don't have some fantastic software called Sentient Trader or the Hurst Cycles indicators for MetaTrader 4. How would you do that? How do you work out your current wavelength? If you are not an experienced Hurst Cycles analyst, how do you get your current wavelength? Well, the way that you should probably do it is that you should start with what's called the nominal cycle wavelength. Now, we work with a nominal model, which, as you all know, I'm sure, is simply a list of cycles. And the nominal cycle wavelength is the average amount of time that that cycle has been beating with over many, many, many years. Now, the nominal model that I work with, and I'm sure you're all well familiar with this, is the original nominal model that Hurst defined in the 1970s for his Hurst Cycles, Cyclitech Cycles course. And so, for instance, the nominal length of the 20-day cycle is in fact 17.1 days. And to this day, I still work with that average wavelength for the 20-day cycle. I see some people still joining us. Hello, David. Welcome. So if you want to plot the FLD on your own trading platform or your own trading software, then I would recommend that you start with the nominal cycle wavelength. So, for instance, for a 20-day cycle, you know that the average length, the nominal cycle wavelength, is 17.1 days. You halve that, you get 8.5, and you round it up or add 1, amounts to very much the same thing, and so you end up displacing your FLD by 9 bars. Then what do? Then you look at your FLD on your chart, and you look at how price interacts with that FLD. And once you get used to this, it's not very hard to do. Once you get used to the sequence of 8A through H interactions between price and the FLD, you can actually see where your FLD has been badly positioned. For instance, when price crosses up above the FLD in its first interaction following an 80-day cycle trough, you expect that to be an A category interaction, and you expect price to reach up and fulfill its target and probably exceed it a little bit, then come down in the B category interaction where it is expected to find support at the FLD. So while you are watching your charts with your estimate of an FLD, if you see that price comes down and finds support a little bit above the FLD, for instance, then you know you probably need to bring your FLD a little bit closer to price. I hope that makes sense. So what ends up happening is you get a little bit of a feedback loop. So you plot your FLD on your chart, and then you watch and see how price interacts with it, because you know what to expect. And you adjust your FLD, your cycle wavelength. You adjust the amount that it is displaced to the right because of feedback from watching it. But you must be aware of amplitude shifts in the other cycles. And if that doesn't make any sense to you, please go back and have a look at last week's video, not last week, our previous video, in which I discuss what happens to cycles when you get various different amplitudes in the various cycles. So you must beware of those amplitude shifts. So that's the long answer to can you plot your own FLDs? Yes, you can, but there are some complications. Another question that I'm asked very often, and we were asked after our previous webinar, is why do I keep speaking about the 20-day cycle? Why does Hurst Signals work with the 20-day cycle? Is that the only cycle that it works with? What about all those other cycles? There are an infinite number of them. Why don't I speak more about those? I always speak about the 20-day cycle because the 20-day cycle is very reliable. Why is it very reliable? The reason why the 20-day cycle is very reliable has to do with the harmonic ratios to the longer cycles. To explain that, let me show you what those harmonic ratios are. When you start with the 20-day cycle, it has a harmonic ratio of 2:1 to the next longer cycle, which is the 40-day cycle. The 40-day cycle has a 2:1 harmonic ratio to the next longer cycle, which is the 80-day cycle. So the three cycles that we are considering all have a 2:1 harmonic ratio between each other. You know from our previous webinar that we are always considering, we're looking at three cycles working together, and so they all have a 2:1 harmonic ratio to each other. In my opinion, that is why the 20-day cycle really works very well. If we step up to the 40-day cycle, then we also have a 2:1 harmonic ratio between the 40-day cycle and the 80-day cycle and the 20-week cycle, and so on up to the 40-week cycle. But then over here at this point we get a 3:1 harmonic ratio. Now, in my opinion, the reason why the 20-day cycle works so well and so consistently is because there are 1, 2, 3, 4 2:1 harmonic ratios above the 20-day cycle before you get a different harmonic ratio, which in this case is 3:1 with the 18-month cycle to the 54-month cycle. And that's why I believe it works better than the 40-day cycle. The 40-day cycle works well, but it's not as clear. Why? Because it's a little bit closer to this dreaded 3:1 harmonic ratio with the 18-month cycle. And the closer you get to that 3:1 harmonic ratio with the 18-month cycle, the less reliable your sequence is. Or should I express that differently, the more complex your sequence is likely to become. and I'm going to show that to you in a moment. I see William has said that the 20-day cycle is always very dominant, so that's an interesting take on it, that one of the reasons why the 20-day cycle works well is because it is always very dominant, and I'm sure there's a good reason for that, something to do with 20 days and how it sort of fits into our perception of time and all that kind of thing. That's an interesting observation. Thank you. John says, Nathan, we're in the Great White North. Okay, so he's speaking to Nathan. Fantastic. David says he finds the same with the nominal 15-minute cycle intraday compared to the hourly. Fantastic. And we're going to take a look at some intraday stuff. So David is saying he finds the same with the 15-minute cycle compared to the hourly cycle. So in my opinion, the most reliable cycles that follow the most reliable sequences have good, clean, clear harmonic ratios above them. That's the first thing to do. So I'm going to make a fairly bold statement, which is this statement over here, that it does work with other cycles. And in fact, I would go so far as to saying that it works with all cycles if you are aware of the harmonic ratios. Okay? So you need to be aware of the harmonic ratios, and you can make it work for any cycle that you choose. So that's my answer to that question. Does it work with all cycles? Another question that we are often asked is, how far back can I look? That's our third question there. How far back can I look? Because what happens is that people discover the FLD trading strategy. They watch one of my long videos about it, and they say, wow, this is pretty exciting, and they start going back in time. So they plot the FLD, and they find the setting, which is cunningly concealed in Sentient Trader, to plot FLDs far into the past. And they plot their FLDs far into the past, and they look at the FLD going back further and further and further, and they discover something interesting. They discover that when you're looking at the now moment, or the present cycle, it really works. When you look further back, it kind of doesn't work, or it stops working so well. So they ask me, how far back can I look? And the answer, in my opinion, to that question is that you can actually only look one wave of the sequence cycle back. What is the sequence cycle? Well, we have a sequence from A to H, 8 interactions, and that sequence plays over the cycle which is 2 degrees longer than your signal cycle. So I'm throwing a few terms at you, but if you are watching the FLD of the 20-day cycle, that is your signal cycle. It's giving you signals. And 2 degrees longer than 20 days is not 40 days, but 80 days. And we call that the sequence cycle. So in my opinion, looking at past interactions between price and the FLD is only really valid looking back one sequence cycle. And that's one of the things people find very difficult with working with Hurst cycles generally, is you want to be looking back. You want to go further and further back and watch that line. The problem is that line changes over time. Okay, it changes constantly because of your constant recalculation of what the current wavelength is of the particular cycle. So that's why I would caution you, if you are enthusiastically looking further and further into the past, in my opinion, you're not really going to learn very much, because the FLD is incorrectly displaced the further back you go, because you've lost touch with your current wavelength. Okay, I see that I've maybe missed a few questions. There's a question to David, and he's answered. Fantastic. Okay, good. Thank you. William says he uses the same approach, a 4-to-1 look back, and that's in fact pretty much exactly what I'm saying, is that you only look back a ratio of 4-to-1, 2 cycles of 2-to-1 harmonic ratios. So our next question that is often asked is, okay, what happens about the 3-to-1 ratios? In our previous webinar, I spoke only about 2-to-1 ratios. What happens with those 3-to-1 ratios? Okay, well, things get a little bit complicated. So I'm just going to answer this question by showing you some charts. And here is the first chart. And this chart shows us 2-to-1 ratios all the way. And so you know this chart from last week. We spoke about it. I'm just showing you to kind of set the context. There's your A interaction. There's your B. There's your C. There's your D. I'm sure that you all know this by now. You've printed it up and you've put it on your walls. There's your F. there's your G, and there's your H. Okay, that's the standard 2-to-1 harmonic ratio all the way. Okay, and so you're familiar with it. What happens when you have a 3-to-1 harmonic ratio? Such as, for instance, happens with the 18-month cycle. So what happens when the 18-month cycle is getting involved? What happens if you are trading the 40-week cycle FLD and it has a 3-to-1 harmonic ratio with the 18-month cycle? Okay, well, let's take a look at some examples. And this is what happens in a theoretical sense when you are looking at a 3-to-1 harmonic ratio. Now, there isn't time in today's webinar for me to labor the point, but I'm going to explain to you how I work with this. That's your A category interaction. It looks good. It looks normal. That's your B category interaction, looking very normal. C category interaction, also looking normal. Looks perfect. Here's your D category interaction. Still looking very good. Here's your E category interaction. Now here's your first big difference. Your E category interaction doesn't achieve its target and then turn down accurately. It normally exceeds its target. Very important. Then you get some rather complicated and messy interactions. Okay, so the way that I handle these is that I label these D1 and E1. And you will notice on this chart a few things immediately about D1 and E1. They are very bad trades. Okay, you wouldn't want to go short for D1. You don't really want to go long for E1 either. So you really need to avoid them. At this point, we can get complex and we can speak about different ways of labeling these, but I'm going to stick to the simplest way of labeling the next interactions, which are D2 and E2. D2 and E2 are both good trades, nice short trade, nice long trade. E2 is very similar to a standard E category trade in a normal 2-to-1 sequence of interactions. And then here we get back on track with our F and our G and our H. That's what happens if the next longer cycle, 1 degree up, is the 18-month cycle or has a 3-to-1 harmonic ratio. Let's have a look at what happens if you're actually trading the 18-month FLD. What happens here? Well, effectively, very much the same thing happens. You've got your A category interaction, your B category interaction, all looking very normal, C category interaction, and then here is your D, your E, your D1, your E1. I'm sorry to be rushing this, but there's still quite a lot of detail to get through. D2, E2, and F. My mouse is taking a bit of strain. G and H. Okay, so those are your interactions in a 3-to-1 harmonic ratio. I'm going to move on, not dwell on it. Take a look at the video and pause it if you need to really study that. But you can see here why I label those D1, D2, E1, E2, because this is what happens when you get to the 3-to-1 harmonic ratio. Now, let's start speaking about intraday, because a lot of people are really interested in intraday and does it work intraday? The answer is yes, it does work intraday, and I'm going to speak a little more about intraday in a moment. And we're going to take a look at some intraday charts. But one of the first things to be aware of when you're working intraday is that there are other harmonic ratios that are at play in the intraday realm, which is why I always say, yes, it does work intraday, but it's a bit complicated, okay? Because there is definitely a different harmonic ratio at play in the intraday level. And this is what happens to your interactions if you are trading a cycle which has a 5-to-1 harmonic ratio to the next longer cycle. Now you may know that when I was researching intraday cycles for Sentient Trader and started trading intraday cycles, I put a lot of time into trying to figure out what cycles were presently active in the market. And Sentient Trader by default works with a nominal model that includes a 5-hour cycle, and that 5-hour cycle has a 5-to-1 harmonic ratio with the next longer cycle. I'm not going to label the interactions here. You can see it gets kind of complicated. Okay, but there are a few things to that are really worth pointing out. The one thing is that you get a double BC interaction, and each of those BC interactions generally involves price actually dropping down a little bit. So simply because you're working with 5-to-1 harmonic ratios, you get a little bit of price moving beyond the FLD. It's an important thing to take note of. And then you get the same thing happening here on the downside. So you get a double GH again, and yet again the FLD often doesn't provide perfect resistance at that point. And then you get a lot of price crosses. Can you see all these price crosses here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 price crosses. Okay, so it gets really complicated, the sequence intraday, and there are various ways of approaching this, and I'm going to speak about that in a moment. So, a brief overview. That's what happens when you have different harmonic ratios in your nominal model. And the fact is, you do have different harmonic ratios in your nominal model. You can try squeezing your nominal model into constant 2-to-1 ratios, but personally, I believe you have to acknowledge the fact that you have different nominal models working, different harmonic ratios working in whichever nominal model you're trading. David, Trading Hurst says a 5-hour low is a great long to get into. Plotting the 160-minute nominal FLD helps to manage where you are in his experience. Okay, so trading FLDs definitely works intraday, and there are many different approaches, and I'm going to be discussing one approach in a moment. Dale Todd says, perhaps that is why I'm seeing intraday targets generated by Hurst cycles indicators disappear at times. Absolutely, Dale, yes. Intraday targets, and I'm going to be speaking in a moment about why targets appear and why they disappear, and how to know when they are I shouldn't say how to know, but how to approach them. I'm going to spend really the rest of today's webinar speaking about exactly that, because it's a very important thing. The next thing I'd like to speak about is, why does the FLD move? That FLD line moves on your chart, and it can be very disconcerting, because as traders we like things to be clear and concrete, and when a line plots on your chart you want it to stay there. There's even a term for lines which move. People speak about repainting. They speak about indicators which repaint. And repainting is used as a sort of not a slang term, but it's used in disgust. When you mention an indicator, you say this indicator repaints because it repositions itself on the chart. Well, the FLD does repaint, yes. But in defense of the FLD is simply a line which is displaced according to the current wavelength. And when you update your analysis, which you or your software is doing all the time, the whole idea of your analysis is to more accurately calculate what the current wavelength is. Because, as I mentioned in our previous webinar, one of the sort of bits of bad news about working with Hurst cycles is that it's impossible to know now what the current wavelength of any cycle is. So you are constantly estimating the current wavelength, and each analysis that you perform, you are refining your estimation of that current wavelength. And so when you calculate a new current wavelength, your FLD needs to be displaced by a different amount, if of course the wavelength has changed, and so your FLD will move. So yes, you can call it repainting if you like, but it's a fact of life. The last 4 questions I'm going to kind of answer all together for the rest of today's webinar. Those questions are, does it work intraday? And my answer, as I've already indicated, is yes, it does work intraday, but you need to be aware of your different nominal models. And I'm going to take just a minute now to discuss the concept of an intraday nominal model. Over the years, I have had many different conversations with many different traders about which nominal model works intraday. And when I first created the intraday version of Sentient Trader, I worked with some colleagues who know more about cycles than I do, and we took a lot of averages over a very long period of time and found that there was a very constant 5-hour cycle. So that's really interesting. But it's a bit like that sort of mathematical puzzle that no doubt you have encountered, where you have a classroom full of children and the average test result is 70%, but there isn't a single child in that class that actually achieved 70%. Okay, that's the nature of averages. And the same thing, in my opinion, is true with intraday cycles. Although 5 hours turns out to be a very good average length, very often the 5-hour cycle actually stretches as long as 8 hours. And sometimes it shortens down and is about 3 hours. So in my opinion, the intraday cycles work best with the concept of a dynamic nominal model, which is what the Hurst cycles indicators work with. Sentient Trader doesn't work with a dynamic nominal model intraday, but it accounts for that by allowing a much greater variation in cycle wavelength intraday. So it really amounts to the same kind of thing. So the other question that I'm going to be answering in the remainder of today's webinar has to do with what I meant when I spoke in the previous webinar about observing what price does as it approaches an FLD. I mentioned that if you're not able to really properly count your sequence, your A to H sequence, then as price approaches an FLD, what you need to do is you need to observe it. What do I mean? So I'm going to be answering that in the remainder of today's webinar, and we're going to be tracking through some real-time data that I've recorded, and I'm going to speak about what's happening in terms of price interacting with these FLDs on an intraday basis. And as David says, intraday you have to have flexibility. It's a very, very important point. So let's take a look. Now, what I've done to prepare for today's webinar is I have taken screenshots on a 5-minute chart, and I've taken screenshots at the end of every bar. I set this up last night, so this is data from this morning. This is the euro to US dollar. It's a 5-minute chart. And so what you're seeing on the screen now is the first screenshot that was taken, which is showing us the close up to Friday night. So let's have a look at these FLDs, and I'm going to show you how I approach these FLDs, particularly on an intraday basis. So first of all, there are two FLDs you can see at the moment on this chart. One is a white FLD, which is a 5-hour cycle, and the orange FLD that you can see here is the 1-day cycle FLD. And these two FLDs are very useful, and they're two adjacent cycles, and there are many ways of trading with them. So let's speak a little bit about what has happened this morning and how we could have used these FLDs this morning up until about lunchtime here in Europe to trade the euro to US dollar. So first of all, let's focus on this 5-hour FLD, and let's say that we want to be trading this FLD. I want to be trading this FLD. So the first thing that we can do is we can have a look at what we see on this chart. Now, of course, if you want to start identifying a sequence, your A to H sequence, then the first thing you need to do is you need to step back. Why am I not doing that? I'm not doing it in today's webinar because I think you can get very caught up in the details, and I don't want to get caught up in the details, and I want to show you how you can actually avoid getting caught up in the details. Yes, you can zoom out and you can start counting your sequence. Intraday, I believe you need to take, as David says, a more flexible approach. So let's have a look at what's been happening here. You can see that the 27th of January, which was Friday, price started tracking along this white FLD. Can you see that there? Let's hope my pen is going to work without causing technical problems. You can see that from this bar over here, all the way up to this bar over here, price was actually pretty much tracking along and sticking to that white FLD. I'm sure you can see that. Then it burst upwards. Now, why did it burst upwards? Well, do you notice this orange FLD? What happened over here? This orange FLD provided support for price. So price came down, found support at the orange FLD, and then bounced up again. And this circle over here, as a matter of interest, is the one-day FLD target. So you can see price bounced from finding support at the one-day FLD, came up here and reached its target for the one-day cycle, for the crossing of the one-day FLD. Okay, what has happened since then? Well, price came down and crossed below the white FLD over here, and then it formed a trough over there, and it crossed back up above the white FLD. Okay, so that's all really obvious. But now let's speak about what some of those crosses indicate, and you know what's happening with those crosses. Okay, so let me clear this. First of all, here you see price forms support at the level of the one-day FLD. When does the one-day FLD provide support for price? And I'm going to make that a rhetorical question. I could wait for you all to try and answer, and I'm sure many of you would be able to provide me with the answer, but let's just move this along a little bit. The one-day FLD provides support for price at around about the time that the one-day cycle is forming in the market. The one-day cycle trough is forming in the market. Price will often find support. Okay, so it is very possible that over here is where there is a trough of the one-day cycle. Okay, and do you notice here at the foot of the chart we see the circle and the whiskers to each side for that one-day cycle. So that orange line over there indicates that yes indeed this was within the range of time that could be considered for the formation of the one-day cycle trough. As a matter of interest, you might argue that this point over here, which was the next 5-hour cycle, that turned out to be the one-day cycle trough. But when you see price finding support at the level of the one-day FLD, and there is a one-day cycle trough expected, then usually that is where the one-day cycle trough is actually forming in the market. Now, when a one-day cycle trough forms in the market, that means the one-day cycle is turning up. Okay, so what do we expect? Well, we expect obviously a bit of a move up. Okay, but then, as tends to happen, the market moves down again. Now it moves down and it crosses this 5-day FLD. So let me ask you this question: do you expect that target to be fulfilled? Where is the target for that? It's down here off the bottom of my chart. Do you expect that target to be fulfilled for a cross down below the 5-hour FLD? Again, I'm not going to wait for you to answer. I'm sure many of you know the answer. My answer is no. Why? Because I think it's very likely that the one-day cycle trough has formed. Okay? If the one-day cycle trough has formed, that means the one-day cycle is moving up. And when price next comes down and moves down below the 5-hour cycle trough, 5-hour cycle FLD, gosh, so many words to think about, I don't expect it to fulfill its target to the short side because the one-day cycle has already turned up. Okay. When it crosses up above the next, when it next crosses up above the white or 5-hour cycle FLD, do I expect it to achieve its target to the long side? Yes, I do, because if the one-day cycle trough has formed, then generally speaking, I would expect it to achieve that target. It hasn't achieved it. Why is that? Well, because on Friday afternoon, everybody gets a bit bored and they go home, and they probably just couldn't really have been bothered to push price up to that FLD. But that FLD remains an important target. Okay, so let's now start stepping forward because, as I mentioned, I have here screenshots taken every 5 minutes. So trading commenced, if I can get this thing to move forward. There we go. Trading commenced. And of course, this is on MetaTrader 4. So the first thing that you'll notice is there's no gap for the weekend. I mean, the weekend is not included in your time. And here there's a very important discussion that we probably should have, but there isn't really time to have it today. But how do you handle FLDs when it comes to weekends? A very important thing, probably the subject of a separate webinar. But let's have a look at what happened. So first of all, price really bounced up. It exceeded that target that was generated on Friday, and it started trading. So now we're watching it trade, and so far our FLDs are remaining fairly constant along on that chart. Can you see they haven't moved? That's because our analysis hasn't yet really been updated. There hasn't been any big change to that analysis. So now what's happening, let's just pause here. This is at about, where's this, about 1:30 in the morning, Central European time. I think it's the Central European time. Let's just take a look at what's going on here. First of all, you can see that we now have a one-day cycle trough over here on Friday, and it was actually at the position of that second trough in the market. Still a very good, reasonable position for that trough. And let's look at peaks, because the market has been moving up. Can you see here a circle for the one-day cycle peak, the 5-hour cycle peak, and the 90-minute cycle peak? So we've got a little cluster which is called a nest of highs. So I'm looking at price coming up into a one-day cycle peak. So what do I expect to happen after it forms the one-day cycle peak? And when I say what do I expect to happen, I'm speaking about FLDs. What do I expect to happen in terms of these FLDs? Well, I would expect, following the formation of the one-day cycle peak, I would expect price to cross down below the FLD. And in fact, when price crosses down below the FLD, then I have confirmation that we have a peak of 5-hour magnitude, and therefore probably it's also going to be the peak of our one-day cycle. Okay, so let's keep stepping forward. Here's another sort of a pop quiz question to check whether you're paying attention. What happens if price crosses down below the FLD over here? Is that meaningful? If it crosses down over there, there's going to be a target generated. Is it a meaningful target? No, because the FLD itself drops down just a few bars later. So price could just stay horizontal, and it could end up crossing down below that FLD, then back up above it, then down below it, then back up above it. Okay, I see Mark has a question. Are the bars after the gap late Sunday bars? Yes, these are late Sunday bars. That's right. Sunday trading starts at, according to this server time, it actually starts at midnight on Monday morning, okay, or Sunday night. So this is all Sunday night trading that we're looking at so far. Okay, so let's keep moving forward. Let's step forward. We're looking at price coming up into a peak of the one-day cycle. There it is. It came up into a bit of a peak. Is that the peak? Well, you've got to be careful of jumping to conclusions. It looks like there's still some energy still in that market. We have a nice VTL there for the purple cycle, the 90-minute cycle, but let me not speak about VTLs just yet. And price is still moving up, and it looks as if though it's heading up into forming a bit of a peak. So in terms of our 5-hour FLD, what are we looking at doing? Well, I'm just stepping forward. As you can see here, nothing has really happened yet with the FLD, and I get to this point over here, which was at about 5 o'clock this morning, or 5:15 this morning, and you can see prices come down now to that white FLD, the 5-hour FLD. So remember what we've been expecting to happen because of the analysis. The analysis is telling us to expect a one-day cycle peak. There's the nest of highs. We've been expecting a one-day cycle peak, and the first thing that's going to happen, the first potential trade, would be when it comes down to the 5-hour FLD. Now, what happens when price comes to an FLD? Well, it either crosses down through it or it finds support at it. The other thing that you will always find generally with FLDs is when price encounters an FLD, they almost always give price reason to hesitate. So let's actually see what happens over here. And as we step forward, you can see price has now crossed down below that FLD. Now it pulls back up again and it's doing a little bit of tracking along it. But now what's happened? It's dropped down below it. So we have a target from that 5-hour FLD. But have a look at what price is doing now. It's crossed down below the FLD, and it's doing what it does almost every time it crosses an FLD, almost without fail. it's coming back towards that FLD. So this is the critical moment. Is it going to be able to cross down below that FLD, or is that FLD providing it with some rough support? So let's keep stepping forward. And you can see price still going along there. Now, very important little moment. Can you see what's happening as price comes to the FLD over here? It's come back up to the FLD, and what I mean by watching price as it meets that FLD is you have a look and you see, what's that FLD doing now? It looks as if though that FLD is providing some resistance. So it looks as if the price is getting through the FLD. Now we step forward a bar, and what happens? The FLD moves. Wow, isn't that frustrating? This is a dreadful indicator. It repaints. Okay, so why did the FLD move? The FLD moved because the analysis has been updated. So let's consider what's happening now with this slightly moved FLD. It hasn't moved very much. It's moved only a few bars. But let's reassess the situation. First of all, we've been expecting our one-day cycle peak. There it is. We were expecting it right over there. Here, just a little bit later, is clearly a peak of some kind in the market. Is it possible that that is a one-day cycle peak? It is possible, yes. Now, there's a useful little VTL for us to speak about over here. Here is the white VTL. That's the VTL of the 5-hour cycle. Can you see how price has interacted with that VTL? It has dropped down below the VTL, and then look what it did with this very interesting bar over here. That bar, price came right back up, tapped the VTL from below, and it's continued to drop down. Now, that is the kind of thing you see happening again and again with the VTL. I know this is not a webinar about VTLs, but it's worth mentioning. You'll see it time and time again. Price crosses the VTL, comes back and taps it. That is a sure sign that you're witnessing a turn in the market, and it's probably time to go short. But let's concentrate on the FLD over here. What happened? Price came down to the FLD, and it found support for 1 bar. 2 bars, 3 bars, 4 bars, and now it's dropping away down below it. So I think odds are good for the market turning down. But can you see how when you're looking at price interacting with the FLD in the real market, it's not as nice and clean as those ideal charts that I show you from Excel, which is why I believe you need to watch price as it approaches the FLD. And part of why I'm showing you this has to do with the whole concept of, can you automate this process? The answer is yes, you can automate it, but you can automate it only to a certain extent, because the interaction and the interplay between price and the FLD is a magnificently complicated thing. And once you get used to identifying it, you can learn how to trade it, and you can learn how to identify these interactions and trade them successfully. Automating that process is complex. It is possible, but you really need to, learn how to do this properly first. That's in my opinion. So now what's happening? Price is coming down. It's not looking really tremendously, bearish yet, and it's hovering down below that FLD. Now it's come back to the FLD. Another critical moment. Price has crossed that FLD. Okay, there's no denying it. It is below the FLD. And now it's come back up to that FLD. Now we're going to watch very carefully and see what happens. Oh, did you see what happened? It happened really fast. It happened in 1 bar, but it came and it tapped to that FLD, and it came down again. Price is being repelled, rejected to the downside by the FLD. Now is a good time to think about going short. We watch it, and price bounces around a little bit, and there we go. Price drops down, and it achieves that target for the 5-hour cycle. Now I'm going to keep going because there's actually a lot more to this FLD. I hope just watching that little section about the FLD answers lots of your questions about how all of this works. But now let's ask another question. If this was the one-day cycle over here, okay, there's the one-day cycle, there's the circle. This is very likely at the moment the one-day cycle peak. Okay, so if that is truly a one-day cycle peak, then what are we expecting? Price has now achieved its target for the 5-hour cycle FLD cross. What are we expecting? Are we expecting it to come back up and make a new peak? Well, no, I'm not actually. What would I expect it to do next? In my opinion, I would expect it to come down to the 1-day FLD, which is down here. So I think there's still some good downside available to us. Okay, there aren't any other FLDs to get in the way. So let's take a look at what happened, and let's just speed this up a bit. I'm going to keep sort of spinning through these screenshots, and let's see what happened to price. And price comes down, and now something quite interesting is happening, because here is the 1-day FLD, this orange line over here, and here is price, and it had a nice steep fall down, and now it's hesitating. Okay, so what's happening here? Well, you can go back over your cycle analysis and you can try and work out where you are in your sequence of your 1-day cycles. But there's a bit of a problem here. There's in fact quite a big problem. That is that we're looking at the 1-day cycle FLD, and we have a weekend just behind us. So we've missed 2 days. So in fact we've missed one full day. We've missed 2 complete waves of the 1-day cycle. So that's a bit of a problem. So if you're trying to identify sequences, then at this point, trading intraday, it can be a bit tricky because we don't know whether we're expecting the FLD to provide support or whether we're expecting price to cross the FLD. But let me say this, and it's a very important subtlety. Even if you are unable to identify the sequence, you watch what price does as it interacts with that FLD. If it finds support and then bounces up, all well and good. You can be maybe getting into a long trade. If it breaks down below the FLD, then you are expecting price to head down towards the 1-day FLD target, depending on the bigger picture for your analysis. Now, the bigger picture, I won't show you the chart, but the bigger picture for this analysis is that the euro to US dollar has been expected to make a fairly big peak fairly recently. I think it's an 80-day peak or something like that. So we are expecting bearish pressure to increase on the euro to US dollar. Let me see, I think I've missed a few questions as I've been sort of rambling on here. David at Trading Hurst is posting some results of his new robot on the forum, this evening, and his blog, so that's going to be really fascinating to see. There are various ways of mitigating against the complications of FLD interactions intraday. That's something to look forward to. Marco then has a question about if the FLD is falling, is it indicative of price falling as well? And as David says, not necessarily. And David then says, if I was looking to get a long off a 1-day low, I'd like to see the 1-day FLD falling. Okay, so let's have a look at what price does now, and let's step forward. It's approaching that 1-day FLD. There we get a bar, and it looks like it's crossed that 1-day FLD. But has it really? We're looking at a 5-minute chart. You must bear in mind the duration of your bars and the time frame that you're looking at. A 1-day cycle, we're getting quite a lot of wiggles in the FLD, and so price has crossed down below the FLD, but you've got to be careful. The FLD itself comes down to this level in just a few bars. So just a few bars later, the FLD is at that level. So let's keep stepping forward. And I'm going to speed it up because it's time for us to bring this webinar to a close. But have a look at what happens here. Price has crossed down below the 1-day FLD. It comes back to the 1-day FLD, gives it another tap. Has it finished? Not yet. It's coming back up to the FLD. So far, what are we seeing? So far, we're seeing the 1-day FLDs providing approximate support to price, but price has slipped below it. So at this point, we're looking at price completing its cross below the FLD. And remember what it will do. After it crosses an FLD, it will often come back and tap it. And so here you see price tapping that FLD. Here you see price tapping that FLD again. So price has crossed the FLDs, come back to tap it. It's really looking very bearish. At what point do you jump into your trade? Well, you might want to be looking at a valid trend line along there, or perhaps you want to set some horizontal levels over there. If price drops down below this FLD, successfully crosses it, then we have a target which is a good distance down. So let's keep going. Price has come back up to that FLD. You see how it's really struggling at that FLD. Now it's dropped down again. Okay, this is looking very bearish. That FLD is unable to provide support to this price movement. So we keep moving, and price comes up again to the FLD. Oh, it looks like it's popping up above it. But now we have an interesting situation because the 5-hour FLD has come down here. Remember, any FLD at any time will provide resistance or support to price. So we're still struggling to get down below the 1-day FLD. We've now got a price coming up to the 5-hour FLD. And what happens with the Hurst cycles indicators for MT4 is because price has crossed the FLD, it is projecting to these targets. Should you take those targets seriously? Well, I personally wouldn't, because you have to look at the context. What is the context here? Price has been finding approximate support a little bit below that 1-day FLD. I think that I have a 1-day peak over here. I also think it's very likely that an 80-day cycle peak formed a little while back in the euro to US dollar. So the emphasis at the moment is probably on the market moving downwards. So you see, you cannot take every single time price crosses an FLD as, oh, okay, here we go, now we're going to that target. You have to look at it within the context of what is happening. So let's move forward again. Can you see how price has come up to that 5-hour FLD, the white FLD? And can you see what it's done? It's now tapped that FLD. It hasn't actually effectively crossed it. That is very bearish because it's coming back for a tap. What is the kind of rhythm that you expect? You expect price to cross the FLD as it did over here, and then its next interaction is almost always a tap interaction, and the price is going to come down. It's very, very important. Really simple rule of thumb. When you get a clean cross, what's the next interaction? You get a tap. Okay, and so let's move forward again. That's a very bearish moment, and you need to learn to recognize those moments. Price moves down. Okay, yes, it looks as if though things are resolving to the downside. And let's move forward. We're now below both the 5-hour and the 1-day FLDs. And there we go. The bottom drops out of the market, and price is heading down to achieve that 1-day cycle, 1-day FLD cross target, which it achieves over there. Okay, so and I think that's all the screenshots that I have to show you today. So on that note, I'm going to bring an end to today's webinar. I hope that I have succeeded in answering your questions about the FLD. The FLD is a really very, very powerful tool, and it's very simple, but it's also magnificently complex in terms of working with it and trading with it. But the more that you work with it and the more you practice identifying these interactions between price and the FLD, the more useful I believe you will find trading the FLD. And it's a skill worth learning. I see William says it takes extreme skill. It's a skill very worth learning once you learn to recognize the fascinating interactions between price and the FLD. It's a skill worth learning because it can make a huge difference to your trading or your investing. So on that note, I'm going to say thank you very much for joining me in today's webinar. I do apologize for our technical problems which caused us to run over. Thank you very much for joining me. Thank you for your interest in Hurst cycles. I look forward to seeing you in our next webinar, which will be in another 2 weeks' time. If you have any questions or any requests for what we should speak about in these webinars, then do please email us at info@sentienttrader. Thank you for joining me. Have a great 2 weeks, and I wish you, of course, profitable trading.